Hello, everyone. Today, the topic is dedicated to the students of international finance again. So today we'll be discussing the international finance agencies. So let's start with the same. Uh, Today we are here to discuss that what are the various agencies that facilitate international flows. As it's being shown, we have IMF, World Bank Group, World Trade Organization, and Bank for International Settlements majorly, which contribute as agencies that facilitate international flow. To begin with, it's normally said that international lending agencies have had a pivotal role in providing finance in steering the economic fortunes of many developing countries. They have attracted considerable criticism for ignoring the ground realities, prescribing uniform policies for countries irrespective of the economic, social, and political disparities, as well as not paying attention to the human aspect of reform. The major multilateral agencies are International Monetary Fund, World Bank, also known as IBRD, that is International Bank for Reconstruction and Development. Then we have IDA as a part of World Bank Group that works under the IBRD. International Finance Corporation, IFC, International Finance Corporation. Then we have ADB, that's not a part of World Bank Group, that's separate of the World Bank Group. We have ADB, Asian Development Bank. Then we have European Investment Bank, that is EIB, European Investment Bank, that is EIB. We also have IEADB, which stands for Inter-American Development Bank. The IMF and the World Bank together, the IMF and the World Bank are known as multilateral development banks. That is multilateral development banks. All the institutions share one feature. They are post-World War II institutions. All the institutions are post-World War II institutions. Each set up with a specific set of goals. Of these, IMS has had the most pervasive impact on the international finance. So to begin with, first, international finance, IMF, that is International Monetary Fund. The IMF is an organization of 183 member countries established in 1946. That is, India got independence in 1947. So World Bank and this group was established prior of independence. The IMF is a specialized institution in the United Nations organizations. It was set up as a non-profit organization at the UN United Nations Monetary and Finance Conference held at the Bretton Woods, New Hampshire in the USA in 1944. IMF was a brainchild of the Britain and the United States. It was a brainchild of the Britain, please note, and the United States. Both countries wanted that IMF to be a central institution in a new economic system that they believe would come to exist after the World War II. The United States itself was divided on the principal role that IMF was expected to play. The intention of the chief US negotiator was to make IMF provide funds to a member country experiencing temporarily balance of payment deficit so that the recipient government could follow the Keynesian policies and effect social reforms. The major function which the IMF follows is it provides loan for the correction of the balance of payments of the developing countries or the member nations. It's basically for the member nations. It promotes the international monetary cooperation and exchange stability. IMF supports in terms of exchange you need for the economic welfare of a country. To foster economic growth and high levels of employment, it provides temporary financial assistance to help to ease imbalances of payments. So in particular, the IMF has three main sources of funding. That is, first is contribution from its members, who are called shareholders. Second is, first is members, majorly, who are the shareholder, plus gold reserves and interest charges, interest charges and loan repayments from the borrowers, and loan repayments from the borrowers. These are the three main sources of funding for the IMF. USA is the major shareholder, largest shareholder, and the member contributors as a primary member contributor as primarily developed countries. So as discussed, the main sources of funding contribution from its members, who are called the shareholders, gold reserves, interest charges for the loan payments from the borrowing countries. USA is the IMF's largest shareholder and the member contributors to primarily developed countries. So there are three types of contributions as per the IMF is concerned. The first is quotas. They are the dues paid by the member countries. They are the largest source of IMF funds. First is quotas and are basis for extending loans to its member countries. Quotas create a pool of funds called currency pool. Next is borrowings. These are the borrowings by the IMF, either from the member countries, the G10 under the general agreement to borrow, from oil exporting countries, or commercial borrowings from the private institutions. Last is the trust. These contain extra contribution by the member countries for specific purposes. The IMF's main revenue is the interest income. Please note, the IMF main revenue, source of revenue, is interest income on its loans to its member nations. The revenue meets the IMF's operating costs, interest payments on member contributions used for the making loan. Next is World Bank Group, which was established in 1944. The group assists development of the primary focus of helping the poorest people and the poorest countries. It has 183 member countries, and as per the 2024 data, the member countries are increased to 189. It composed of 5 organizations. First is IBRD itself, which is also known as World Bank. Then we have IDA, IFC, MIGA, Megha, ICSID, and these organizations plays an imperative role as and called as a World Bank Group. So below is a statement as per 2024 by Agostí Tano, the World Bank's country director for India. That is, they provide a well-articulated investments in the institutional capacity and coordination at district level. It's basically for a promotion of India, that is development of India, investment loans which are being provided to the India, and as per the World Bank's director, they provide well-articulated investments in institutional capability and coordination at district level. The program will enhance the evidence-based planning and policy making, efficient public sector interface with the private sector, and improved service quality to the public, all of which are the fulcrum of the broad-based growth, especially in lagging districts. This program will thus contribute to the state's objective for achieving more balanced growth across the various districts. If I talk about the member countries, I have already discussed almost all the developing countries who wish to attain growth objectives. They are the part of the World Bank Group. The World Bank focuses on the quality and effectiveness of our members' country development and development plans and investment priorities. The bank categorized countries into 4 groups based upon the per capita gross national income, low income, low middle income, upper middle income, and high income countries. The first 3 categories come under the term developing countries through their levels of the development. Though their level of development may quite be different, the categories are made on July 1st of every year. Loans from the World Bank, if I say, the World Bank does not extend loans to the countries with a per capita gross national income of $1,165 or lower, because this is done by the IDA and the World Bank's associate concern. It gives three types of loans majorly. That is conditional aid, project-oriented aid is given specific for the specific projects. Recycled aid, that which accumulates in a country's account due to devaluation of its currency or change in the scope of its projects, and program oriented aid. It also gives structural adjustment loans to bring about changes in the specific sector, for example, energy sector. These are certain countries who are not part of the World Bank group. That is Cuba, Monaco, North Korea, Vatican City, State of Palestine. These are certain examples to quote that who are the not the member nations of the World Bank. And the World Bank associates, I have already told you, IDA, IFC, Megha are the associates of the World Bank. Each was set up with a different objective to assist the less developed countries and to supplement official development assistance from the USA, UK, France, and Japan. Countries such as Argentina, Brazil, Singapore, Mexico, Hong Kong, Taiwan, Pakistan, South Korea received multilateral aid during 70s, 80s, and 90s. That's the latest report, taken from an article, a grant given by the World Bank to India as per reported on December 3rd, 2024, which was specifically for the state of Maharashtra. And the World Bank Board of Director Executive approved a new loan through which their efforts is to stimulate economic growth across the state, especially in the lagging districts. This program will help strengthen the capacity of the district administrations to identify growth opportunities, facilitate private sector participation, and use the data for evidence-based planning decision making. Such loans would strengthen the Maharashtra's institutional capabilities in district growth and will support the district planning and growth strategies. So, continuing with the IBRD, which is also known as World Bank, it provides loans and development assistance to the middle income countries and credit-worthy poorer countries. In particular, its structural adjustment loans are intended to enhance a country's long-term growth. It may spread its funds by entering into co-financing agreements with official aid agencies, export credit agencies, as well as commercial banks. So IDA, as already discussed, IDA is an important segment or part of the World Bank Group, which was set up in 1960. It acts as an agency that lends loan to the very poor developing countries, very poor developing nations on highly concessional rates. IDA lends loans only to those countries that lack the financial ability to borrow from IBRD. The nations which are not able to get finance facility from the IBRD, the same loan can be expected or can be requested from the IDA, whereby I must tell you that IBRD and IDA run on the same lines. They share the same staff, headquarters, and project evaluation standards. IDA is called as the soft arm to the World Bank. It's an important and imperative part of the World Bank. IDA, a reason being, it gives interest-free aid to the world's poorest countries. It gets funds through the pledges from the donor countries. Its funds are replenished after every 3 years. IDA loans are given in the SDRs and are repayable after every 50 years with a 10-year grace period. And as per the latest records, up to March 2024, India's external debt was $663.8 billion from the IDA. Next is International Finance Corporation. IFC was set up in 1956 to promote the sustainable private sector investment in developing countries by financing private sector projects, helping to mobilize the financing in the international financial markets, and providing advice and technical assistance to business and governments. Next is Megha, that is Multilateral Investment Guarantee Agency. Megha is an important and imperative part of the World Bank. As Megha was created in 1988, they promote FDI in emerging economies by offering an important aspect like the insurance, providing political risk insurance to investors and lenders, and helping developing countries to attract and retain the private investment. They act as a guarantor between the developing nations and reduces any kind of political risk which may occur due to investment in the foreign country. In the fiscal year, as per fiscal year 2024, the Multilateral Investment Guarantee Agency issued 8.2 billion in new guarantees. This was a record for the agency. The risk that Megha insures against are currency inconvertibility and transfer restriction, government expropriatory action, any kind, which is also known as country risk analysis. That is an expropriatory action by a nation on the other nation working over there. Situation like war, terrorism, and civil disturbances. Any kind of breach of contract, the non-honoring of the financial obligations. Investments does Megha insure are equity loans, shareholder loan guarantees, management contracts, asset securitization bonds, leasing activities, franchisee agreements, and license agreements. Next is ICSID, that is International Center for Settlement of Investment Disputes between the nations. So it's an important one because it's an organization or the part of the World Bank Group which actually helps us to resolve the issues between the nations in regard to investment, settlement of investment disputes. And this promotes the increased flow of international investment. Next is the WTO, that's World Trade Organization, very common. Everyone knows of if you're a student of international finance, that without WTO, it would have not been possible to increase the trade flow. It was created in 1995. The WTO is a successor to General Agreement on Tariffs and Trade, that is GATT. It deals with the global rules of trade between the nations to ensure that trade flows smoothly. At the heart of the WTO multilateral trading system, trade agreements are certain functions which it includes are administering the WTO trade agreements, serving as a forum for trade negotiation, handling trade disputes, monitoring trading policies, providing technical assistance and training development for the developing countries, cooperating with the other international groups. WTO Act is an indispensable part in order to promote the trade between the nations. It helps us to formulate the trade guidelines and to resolve the issues in terms of trade with any nation dealing with each other. Then an important part is BIS, that is Bank for International Settlements. It was set up in 1930. The BIS is an international organization that fosters cooperation amongst the central bank and other agency in pursuit of monetary and financial stability. It is a central banks of the central bank. That is, in every country having a central bank, they will be acting as a central bank to them and lend. They are, if we say that RBI is a last resort of finance for India, similar way BIS is the central bank for every nation. Function of the BIS are the Forum for International Monetary and Financial Cooperation, the Bank for Central Banks, Center for Monetary and Economic Research, and agent or trustee in connection with the international financial operations. And the other regional development agencies are like Inter-American Development Bank, Asian Development Bank, African Development Bank, and European Bank for Reconstruction and Development. So these agencies will also be discussed in detail in further video. So this is the landmark, and further slides will be continued from these other regional development agencies, because they also plays an important role nowadays for developing nations, that when the support from World Bank is not accessible to any poor nation, there are other agencies which act as a medium or source of finance to those nations as well. Certain references which have been used, and thank you very much for the cooperation. Thank you.